All right, hello there. This is David from Trader Dale's, and today we're just going to go over a quick trade that we actually did Tuesday, April 7th, just to give you an idea of when this happened. This is actually on the day that I am doing this video, so if you want to go back to your charts, you can check it out yourself. So the framework of this trade comes from our bread and butter, okay, which is continuation trades, internal to external liquidity. Internal liquidity meaning 1 hour fair value gaps or 15-minute fair value gaps, or really any fair value gaps by that means. It just really depends if you're day trading or swing trading. Here, as day traders looking for what's going to happen on the opening of trading, this morning we came in and we created this 1 hour bearish fair value gap after a move lower at 6 o'clock this morning after consolidating for a little while. Basically, what we're looking for is we're looking for a push and a turtle soup into that 1 hour fair value gap and then a move lower to external liquidity. And we had a couple of external liquidity levels today. We had this low right here, and then we had previous day's low on the downside a little bit lower than that. But let's kind of show you how this sets up. So the narrative is we want to see price tap back into the 1 hour fair value gap. That's the first thing. Okay, the second thing is we want to see an SMT, a divergence with the ES, meaning one of them makes a newer high and the other one doesn't. And as you can see, that's exactly what happened here at the top here. On this candle, the ES did not break this high, the NQ did not. So then we go down to the lower time frames, okay, and we're looking for a signal, okay. Now, here is the SMT here, okay. Here is price turtle souping this morning high right here to create that SMT. Okay, but this trade actually worked a little differently. We usually get this trade somewhere up in here, but it didn't play out that way, so we kind of had to wait. And as price came back down, came back up, it created another inverse fair value gap and an SMT, again, with the ES. And what SMTs are going to do, it's going to show divergence. It's going to show manipulation, meaning price is likely to continue in the original trend, which is lower. So the entry here after this SMT is a short, okay, right at the close of that candle, okay? Don't mess around, just go short. Stop is going to be just above the inverse fair value gap and above the candle that made that low. And what are we going to target? We have a couple of targets here. Okay, so that first target is going to be this low right here, which is pre-market lows. That alone is a 3.59 risk to reward trade. Okay, now we had more liquidity down lower that we could have gotten. So typically what we do is we target the external liquidity. Okay. And then you can keep a runner. A runner could be 1 micro out of a 4 or 5 micro position. It could be anything. And then you can trail that a little bit lower to the desired liquidity level, which was this blue line right down here. Now, obviously, we kind of stopped short, we rallied, and then we came back into it. And the market does that a lot of time. It will try to induce early buyers and then just take them out and then eventually move higher as we see here. But this is really our bread and butter, and it really comes from an internal to external move. Internal, okay, 1 hour fair value gap to external levels, external 1, external 2, and then external 3. And we use a shorter time frame kind of pattern with SMT. We need displacement and a manipulation up with SMT. We need an inverse fair value gap to the downside. We need momentum. We need a close below. And most importantly, we need clear targets. And that clear target will be early morning pre-market lows, which is also the external low of this move and also the low of the 8 to 9 a.m. 1 hour candle, which typically will outline the pre-market highs and lows. This is something that we do almost every day in the market. Okay, it's our bread and butter. If you learn this one skill, internal to external, okay, learn how to frame the narrative from the higher time frame and then learn how to use the shorter time frame, inverse fair value gap, or change a state of delivery pattern. These go very well hand in hand with internal to external liquidity. And what puts icing on the top is obviously the SMT, and SMT just stands for smart money, technicals. Okay, everybody has different, explanations of it, smart money technicals, smart money techniques, divergences, whatever it is. It just means that one makes a higher high or a lower low and the other one doesn't. And that signifies manipulation and the likelihood of price going in the opposite direction. If we're delivering from a higher time frame fair value gap and we see something like this and we see inversions and bullish fair value gaps being disrespected, that's our cue to get in, okay, and wait for price to take this down to these lower liquidity levels. Now, we actually got a draw on liquidity trade and an add-on trade here where price stopped short of this level, rallied, okay, and then we got another inverse fair value gap here. Okay, now this not only inversed the fair value gap, it also inversed this order block here, making it a breaker block, which made it a very good draw on liquidity trade down into these levels as well, or even low. Okay, all that done by 10 a.m. this morning. No worries, no nothing. Trump's speaking today all over the news, and anytime you can get out of the market early with some good profits and let the chaos kind of happen the rest of the day, it can be very beneficial for you.
Hey everyone, it's Dale here. I hope you enjoyed the video. If you like to trade alongside me and our team of prop firm funded traders every day, then click the link below the video and hop aboard. We are looking forward to trading with you.